10 January 2023, Tuesday, MAO with Cal once again, guys. Gosh, Tesla has once again pissed off the Chinese. Alright, we're talking about the Chinese PRC right now. Apparently, the Mainland China. You can see on the picture here, it's not an advertisement. In fact, it's the lady protesting on Tesla car. Alright, that was what happened in last year. And now again, the protest has started again. Why? Because Tesla have basically reduced the price. Wait a minute. Reduce the price, isn't it good? Well, the price reduced is good for new buyers if they haven't bought yet. But for those who have already purchased it just a month ago or 2 months ago, oh my goodness, it's just like literally now you see that the same car you bought 2 months ago now is down by 10 to 15%, okay? And the best part is that those people who bought the car hasn't even received the car yet. So this actually pissed off some of the people, and I can really understand how you feel, okay, if you're actually one of them. So this is what is happening right now in China, and people are not happy. And of course, if this is to continue, this will be a problem for this Tesla, because Tesla has a very big fan base in China. And if the people start to feel that, hey, you know what, let's just go back to BYD or something else, then of course, this will definitely hit the profit margin for Tesla. So I'll talk about this shortly, alright? So once again, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Alright, let's just go back and see what happened last night first. Alright, so what happened last night? Well, the Dow Jones dropped by 112 points, but Nasdaq recovered 68 points, and S&P down about 3 points. So basically what happened is that we have Amazon still moving higher, Microsoft, Google is a bit higher, Apple slightly, just up by 0.41%, but it was Tesla that was up by 5.93% up to 119 level. Okay, so what's the problem here? Well, apparently Tesla was much higher. It was like up by almost 10% at one stage itself. So if it wasn't for all these things happening right now, right, maybe Tesla could have rebound. So I'll talk about this very shortly, and you will know why I'm kind of like worried for Tesla once again. Alright, so the Nasdaq notches second day of gains as investors buy beaten up tech shares like Tesla. And main thing is that because, well, apparently the market seemingly is following what the trader Alamax says, right? If first 5 days of the month, everything all good itself, right, the entire year will be fantastic. So it seems to be like that right now. Last night, because of the market slightly higher, so overall itself, the S&P is up for the first 5 trading day of 2023. So by right itself, right, there's a chance of seeing a 14% gain based on statistics since 1920s and now, all right? And of course, take note, we have the consumer price index on Thursday, and very important, it will be the big banks' earnings on Friday. Now, on this coming Friday, Bank of America, JP Morgan, Citibank, Wells Fargo, and of course, investment firm BlackRock, all of them are going to have their earnings result. So if the earnings are not so good, and if their forecast, right, is not that fantastic for the next quarter, then of course the market may dip a little bit. But on Thursday, the CPI data, well, the market is expecting it to be better than expected. Alright, meaning they are looking at 6.5%. But if you ask me, it's alright, my dollar bet will be at about 6.7, 6.8. So that's my personal take. Hopefully it comes in. If not, right, who knows? Anything below 6.5, the market will rocket, man. Alright, so some news from the financial sector first. Goldman Sachs is cutting up to 3,200 employees this week as Wall Street greens goods pass for the tough year itself. For the tough year. Alright, guys, take note of this. We have more and more companies releasing people. Alright, of course the number is not really big time like what we saw in the pandemic period, but it is still there. And of course, having all these things happening right now definitely is not going to help. And of course, that will increase unemployment data next quarter, next month, and next following month itself. So all these is probably indicating that there is a chance of recession, but of course that's what Federal Reserve really want. And of course, Swiss Central Bank has posted their biggest loss in a 616-year history. All right, total loss $143 billion. All right, that's a very big loss for a central bank especially. So all this tells you that, right, we are just creeping nearer and nearer to a bit of problem right now. But of course, once again, guys, some people say that, no, this is okay, this is fine. So I'll leave it there for you to decide. Okay, end of the day is that you make your own final decision. Now I come to investment and trading. Okay. Alright, now if China returns, of course things will get better. Well, apparently so. Apparently from JP Morgan says that if China reopen, right, it could boost Australia economy by 1% GDP. Okay. And of course, Goldman Sachs has just added Alibaba to a conviction buy list, said that the share can rise up more than 25%. Well, because of the Ant Group, approval, and that is probably was the reason. And of course, Many technical analysts are saying that January strong start, yeah, is a good omen. Hence, therefore, they're expecting the market to trade higher in the coming months. All right. So all these are the positive news, and of course, that tells you that hey, not bad, right? We should see a good year for 2023. So let's look at Alibaba shares right now. I want to show you my technical view. Okay, let's take a look. Now, based on my personal view itself, right, I just feel that Alibaba, yep, we can consider a buy, but maybe wait for a while, because you can see that, right, this is where we have the peak here, and of course, this is the most recent peak on the RSI, and of course, this is junction A, and this is B. Hence, therefore, if you compare A to B, we are actually having a lower cycle movement, right? So usually this is actually a bearish movement, okay? So I suspect that even though there's a buy on this Alibaba right now, I think a pullback will be good. Then let's see whether it can hang above $100. If it can stay above $100, then maybe we can see the next level, and that's 125 level, okay? So that is what I see on Alibaba, all right? The support is at $74 right now, and seemingly that is the last time we saw this. And you can see that the market based out around this area, and there was huge volume around this place. That means that the boys have purchased it between $65 to $70. That's why now they are able to, show you and tell you that, what, it's a good time to buy more, but they already have bought it long time ago, in my opinion. Yep. Okay, so that is Alibaba technical view. All right, now let's talk about Tesla. Okay, now Tesla. All right, apparently the Tesla owners in China protest against the price cuts. Okay, so what's happening right now is that because Tesla basically cut their prices, all right, by quite a fair bit, by 13.5%, all right, just by doing that itself, okay? This is not good because they just cut recently in October 24th, all right? So that really pissed people off. Really, this really pissed people off, and of course, people are not going to, buy that because this is not good and not fair. So you can see that the Tesla show in Chengdu, right, Sichuan, right, you see people all going there and make a lot of noise, unhappy, and they really want refund. Okay, apparently they want refund. You can see that the crowd is really, really unhappy. I got a video for you. Let's take a look right now. Oops. Okay, hold on. Okay, that's a bit technical. Okay, so you can see that people are really, really unhappy. They want them to do refund, and this is really bad. But of course, as I said again, there's nothing can be done because if they sign the agreement, then sorry, they will just have to accept it, all right? This is something that you can't change the fact of it, right? So this is not good for Tesla, and hopefully they can really do something with it. But of course, we know that Tesla is trying to fight market share right now. So by reducing the price, it's trying to get market share, and we understand that. But it pisses people off, and if you don't piss people off along the way itself, right, there'll be lesser people buying. Then I think that is not going to be good, right? So it's really how and see how it happen next, but that's why I'm very concerned on this Tesla. So Tesla share yesterday gap up from basically went to 118. High was 123 before it slide off to 119, closing up by 5.9%. Now we can see that we have huge amount of volume recently, and I'm telling you guys this, when a share price has to come down to a support level and it's huge volume, this could be a base level. So as long as Tesla stays above 109, I think Tesla can try 137 if the boys want to push. But if the market fails to stay above 109 and with a huge volume, then the dive down can be very bad, and as the level that I mentioned to you is $92, okay? That is where the concerning factor is. Now, we all know that this Cathy Wood have been buying more Tesla share along the few weeks itself. You can see she's been buying and buying and buying. Well, I just say that, well, maybe her buying has now give some confidence to Tesla, but in my opinion, it's all right. Let's hope that her buying is not going to be reckless, because if Tesla really lose the 109 base again, and people feel that Tesla maybe is too expensive, then of course it can go down all the way to the $92 mark that I mentioned earlier. All right. Okay. So of course, some of you may have noticed this on Trade with the Boys Facebook page about my preview on this coming 14th of January. Now, I'm pretty confident that there will be a shakeout in the market from mid-January. So in short itself, it's just lack of telling exactly the date. It's about between 15th to 20th of January. I suspect that there could be a big shakeout in the market, and that's whereby if you have the right tool like the TWB tool, you should be able to profit from it. All right, I'll show you more in detail on why even the planets are lining up for this particular period. You should be very, very careful. All right, so register for it in the link in this in the comment box later, and do join us. Right, more than 50 people have already signed up for that. Okay. All right, so let's look at the S&P 500 right now. All right, the thing is this, okay, the S&P 500, as you can see, has a very important 3,900 neckline. So the last time it comes here, when in September last year, it came down, hit the 3,900 point, and then it rebounded. You see that? Very nice, right? Then when it came back down again, once it loses that, you can see, once it loses that, the market just go all the way down to about 3,500 points. And then when it rebound again, you can see it become again a resistance. Only when it cross convincingly, then the market stays above it. But once it loses below it again, you can see the market just come off, right? So again, this 3,009 is a very important technical level, and apparently it's right. Morgan Stanley is using it very, very closely, and that's the reason why I want to share with you right now. So at the moment, you can see that the market has just marginally closed below the 3,900 mark last night. So if that is the case itself, right, I'm not how surprised to see the S&P drop down to 3809 again. Now this 3809 has been a very strong support over the last 10 over days, and every time when the market goes there itself, right, okay, you can see the market actually rebound from there. So 3809 and 3900, this about 91 point range itself is very critical for the S&P 500. But the thing is this, what is happening around? Why is everybody looking at this S&P now? Because now everybody is pretty concerned about what Jerome Powell is doing, okay? And I like this conversation between the two CNBC correspondents. All right, I think that they do have their point here. Let me just show you that video and you gauge for yourself. Yeah, let's go.
To the notion that the Fed's hell-bent on getting over 5% and staying there, data be damned.
Yeah, I mean, that's been an idea that's been out there. I think Powell has expressed it in so many words. This notion that they're willing to risk pain in the economy, they're willing to risk higher unemployment, and they're frankly willing to risk the economy slipping into recession in order to fight inflation. I think Bostic may have said it more plainly, perhaps, than Powell has said it, but it's been an idea that's out there. It's an idea that I think that is in the market. I think some of the other comments from Bostic were also very interesting. He told me on Friday he's willing to keep rates high well into 2024. He repeated that today, but then he said no rate cuts through 2024. As you said, he said the Fed's willing to overshoot, Scott. And he also said on the maybe somewhat more dovish side, how do they express their reaction to better data? Well, they'll do a 25, not a 50.
You have to wonder, though, at some point, Steve, and some have raised this issue, too, as to whether the Fed at this point is more interested in saving, if not restoring its own credibility, than it is in doing what's really right for the economy, because they blew it so badly on the transitory side, and now they're going to overdo it on the other side.
Yeah, I think for the Fed, though, Scott, I think those two things are intertwined, their credibility and the economic outlook. I think they feel like they have to restore their credibility in terms of delivering 2% inflation. That's where they think about credibility, Scott. If they don't deliver 2% inflation, if they're unable to get it under control, then they have a whole host of other problems. So that's the way they look at it. And to the extent that they see the risk of inflation to the upside, they are going to risk putting this economy into recession and, as Bostic said, overshooting.
All right, so you heard it right. I think this is a very, very good conversation between two of them, and it's very clear that, right, the Federal Reserve now, the credibility is really on the cards right now, and I believe that they really will bring down inflation down. But the only way to bring inflation down, you need to have the whole economy sliding down or reducing their so-called buying and stuff like that. So I just going to tell you this, guys. I still believe that the recession will come in very, very soon. And once it hit us, it's all right. A lot of people lose their jobs. And of course, Morgan Stanley, Mike Wilson, has just reiterated that it's time to sell the S&P 500 at 3,900, the same level that I have emphasized earlier. So let's look at this particular video and see what this Mike Wilson added on recently. Let's hear him out, okay? Here we go. Let me give you a moment. Okay, I think this video itself was more interviewing this guy, so we're going to go back to the video to the front. Just watch this.
On Friday, 38.95 at a close on the S&P 500. Mike Wilson of Morgan Stanley says 3,900, easy sell. This is what he had to say to start the week. With both sell and buy side consensus so aligned, that look for a dip in the first half and a rip in the second half, everyone is starting to wonder how this view could be wrong. We think it's in the magnitude of the move lower, led by much weaker earnings that have Fed committed to fighting inflation. Mike Wilson says 3,900 is an easy sale. Christian Mamani, I have to say, reading through your notes, you think the...
All right, so again, Mike Wilson from Morgan Stanley is reiterating the point, and I showed you a chart earlier. 3,900 is really a very important technical point. So if I were to be a trader right now, I will short at 3,900 and maybe put a stop loss at 4,100, and then the target I can look really at 3,500 to even as low as 3,200. Whilst Mike Wilson is looking at 3,000. All right, okay. So the thing is this, there are more reports coming out. Oh, sorry, there's a bit of technical here. Wait 1 minute. Okay, let's give it a while. Okay. All right. So apparently, we have some people saying that, right, Jerome Powell seemingly won't stop rate hike until he terrifies the wealthiest of investors. All right. So apparently, this particular article says that the next 2 months, very important, next 2 months, will tell us whether this bizarre blip or something real. All right, I see problems for stocks either way. If inflation stay high, the Federal Reserve will hike to 6%, and inflation falls quickly, margin narrows as wages stay high, and again, stock will come under pressure. And that is exactly what I meant, is that, right, no matter how it's out, right, they really need to cut down inflation fast. If not, this is going to spell a lot of trouble and pain as we go along. All right, so this is another incredible article, but the main thing is this. There's something I'll share with you now, is the VIX. Okay, look at the VIX right now. Now I mentioned that at the time in December it was at 19. Then after that after that it went up to 20 as a base, and of course recently the base is 21. So I kind of feel that, right, we are actually very, very much ready for a breakout very soon. I believe that we're going to see 26 traded in the coming weeks. All right, I feel that way too. Yeah, so of course the consolidation in the indicators basically tells me that we need to be very, very careful. And if, let's say, things really happen from mid-Jan onwards as well, right, having some VIX as a form of protection, I think it's a pretty good deal. Yeah, the downside itself, in my opinion, the maximum I see is about 18, and that is a very good price to buy. It's not a cut loss level. In fact, it's at one more level. So now at 21 and the next base is at 18, I think that it's pretty good, because the thing is, it's 21 to 26 is 5 points, and that's a pretty good money. All right, so think about this and consider buying some VIX today if you think that the market is going to move in the next few weeks. Yep. All right, so of course, this Nick, he's the chief economics correspondent of the Wall Street Journal. He is basically the mouthpiece of Federal Reserve, in my opinion. All right, he has already said that this the recent NFP figures is really not important, because that it doesn't dictate the Federal Reserve increasing of the Federal Reserve rate. In fact, itself 25 basis points seemingly is a very high chance, and of course they're still targeting at 5%. Okay, so in fact, in short itself, right, he believed that the Federal Reserve will continue to do what they need to do, is to hike interest rate until inflation really comes off. So there's no way that there will be another there will be no way a rate cut will happen for 2023. So a lot of people in Wall Street are all hyping and demand or so-called expect there'll be a rate cut this year, but from the look at it itself, right, kind of not possible. And Nick, whatever you've been, if you've been following my MAO, you will notice that Nick itself, he is really a mouthpiece of Federal Reserve, and we all know that tonight Jerome Powell is speaking. So I just feel that if Jerome Powell is going to lean on it itself, I think he will reiterate that more rate hike is really possible. And of course, Jim Cramer, pretty interesting. He actually came in and talked about warning investors of not buying into the tech stocks despite the recent gain. Now, this is something incredible, because we all know that Jim Cramer has always been a very interesting guy. So whenever he calls for buy, the market comes down, right? When he calls for sell, well, that is going to be like, you're going to be opposite. Well, let's take a look what he has to say and see whether you agree with him. All right, let's take a look.
And last Friday's weaker than expected wage inflation number, which suggests the Fed might not have to tighten as aggressively as we thought. This kind of rally, it's seductive. It looks like the real thing. It lasts a little longer than you might expect because there's nothing in the way. Earnings season kicks off this week, but we don't hear from any tech companies. Not for a week or two do you really get that. But you see, the move is, as we saw at the beginning of the day, the move was wrong. It was wrong. What are people doing? They're selling healthcare. They're selling the oils, the industrials, the aerospace, all the groups that are cheap versus their long-term prospects. And they were clobbered. And by the end of the day, I think many of them actually represented some great opportunities. Meanwhile, the tech companies with stocks that roared earlier today, well, when they report, it's most likely that they will tell analysts that their forecasts are too high. Yes, number cuts when they report. So let's do this. Because it was such a complicated day, let's break down the whole session.
Alright, it's a pretty long one. Videos are not going to go into it. But mainly is that Jim Cramer saying that, you know what? Even the tech rally recently, just try to avoid it. Okay, that's a pretty good advice if you ask me. Alright, so that is from Jim Cramer. Alright, so I wrap it up all the news for you guys. Hope you like that. Let's look at the charts for today, shall we? Okay, let's go. Now, first of all, we can see very clearly this is my KFC level. Every day I'll be showing you guys about this. And you can see that we have a strong up thrust on Thursday, then on Monday, then Friday, and then this is Monday reversal hammer. So let's see whether can this sustain. All right, if the market do slip further, it can come back down to this point, and that's 33,031. And of course, if the market stays above it, then of course it can again become a bouncing line for it to go back up again. All right, so that is what's happening right now. For the Nasdaq, it's a long tail down, even though it's up by 33 points, but it's a long tail down. So again, that actually tells you that the current situation is not as rosy as it is. And for Hong Kong market, we have a very incredible triple doji formation. It could be a 4 doji today. So wow, that means that big movement is going to come in for Hang Seng. So of course, the upside can go all the way to 22,000 level, and the downside will be going back down to KFC level, and that is approximately 20,155. Okay, now that is a little bit analysis that usually there is a chance that the market may come and visit again on the KFC level during the period. So we'll watch this very, very closely. All right. Okay, so let's look at the TWB charts right now for us to take a look. Let's go with the Dow Jones. Okay, so Dow Jones for today, we have a interesting momentum. Right, by right itself for today, we should see a selling day because the pivot 2 level is 33,534, and now it's trading below, right? So below OP, below pivot 2 is always a sell signal. But very interesting, yesterday we have the KSI and KRW both producing the buy signal. So kind of like twist around here. But of course, we all know that when the signal call for buy, but the price action doesn't really follow through, then the selling pressure can be pretty bad, yeah? So let's watch this very closely. If the Dow Jones can maintain above the BNB RL level, which is at 33,481, then of course the market is still good to go higher, and 33,616 will be the first resistance, and if the market breaks above it, it can still go up all the way to 34,000. But on a flip note, if the market goes below 33,534, which is right now, and continue to break below the BNB's RL level, then of course 33,353, the MA30 will be the very important first base support. Now, if the market breaks below 33,353, then I can tell you this, the selling can be pretty bad. It can go all the way down to this point here, and that's about 32,570 level, all right? But at the moment now, KSI and KRW both seemingly is supporting it at the moment, so the upside trust is actually there. All right, then of course the Nasdaq, as you can see right now, is trying its best. Now it broke above the BNB RL yesterday, but a big pullback come down. Now today is a doji directional day for Nasdaq, so watch the BNB RL level here, which is at this 11,087. And let's the market now, the MLP and the MA30 is very near to one another, so we need to watch this carefully. Now if the market can stay above 11,131, the upside can be all the way back to 11,255. All right, but of course if the market basically goes below 11,081, then the selling can bring it down all the way to 10,674. Now KSI is red and KRW is cyan, so there's a mixed bag here as well. So likelihood the market will be sideways for time being. Yep. Okay. Okay, so let's continue with the S&P 500. Now S&P 500, as you can see on screen, is a doji directional day, very clear, strong reversal of the BNB RL. The RL is at 3909, and that was a level that I think that this Morgan Stanley says 3,900 is a very good strong sell level. So at the moment now for today, this S&P is Omega signal at 3893.8 is the OP level. So as long as the market stays above 3877, the MA30 is still okay. Now today's low itself is 3876.9. So it's just like basically touch and recover. So this MA30 shows its importance here. As long as the market stays above MA30, the market can still go back up to 3911. But of course, if the market loses 3877, guys, you really need to exit, okay? Because the selling can really bring the market down all the way to the BNB SL level, and that's as low as 3798 level, right? But KSI and KRW both are kind of positive, so that's why the selling pressure may be there, but the buying is still there too. It's going to be a tough one, yeah? Alright, for crude oil, let's take a look right now. Crude oil is showing us a potential breakdown because the crude oil has recovered a few days on the upside all the way, went up to this point here, up by to $76.68. But you can see the BNB support level has restricted it. And this is a higher low formation, but the KSI is red in color. So if the market breaks below 76, break below $73, the selling can bring crude oil price all the way down back to $71, okay? Now, of course, I'm still looking to buy some crude oil at $71.19, and of course, it go better, 69 will be even better. I think this two level will be a good time to take a look on crude oil, yeah? We'll see from there, okay? Alright, then of course, as I mentioned to you, Hang Seng is now doing a triple doji, now quadruple doji potentially, but something to take note of, guys, is that the KSI is still green, but the KRW shows some weakness. And of course, if it ends right today itself, right, that shows that the selling pressure is actually building up right now. So traders, you need to be very careful on this market. And because the Hang Seng has already touched 21,525, so most likely there will be some resistance at this point right now. Yep. Okay. Just give a moment, guys. A lot of some news coming in. Okay, so that is what we have for the indicator side. And of course, let's look at the DAX, which just opened right now. Let's take a look. Oh, DAX not open yet. Sorry, my bad. It's 2 p.m. in the moment. Apology. All right, let's look at it. Sorry. And look at this is the gold market. Yep, here we go. All right, for this is the gold. And you can see right now, gold is now hovering strongly above the MLP at 1868 level. As long as the gold stays above 1868 MLP, you can see that very beautifully it rebounded. And now it's trading at 1874. Now, if it basically continue to go higher, then we can see as high as 1882 get traded. But of course, if it loses MLP, then the chance of it coming down to the 1853 is really, really possible. Yeah. So traders, you need to watch this level 1868 level. Now, for the KSI and KCX, both of them are very positive. That's why you can see a very strong upthrust on the gold market at the moment. Yep. All right. Now let's look at the silver. Silver is still hanging around. Now BNB RL is trading at this 23.51, and you can see that silver is just really holding this really onto it right now. So as long as silver stays above the BNB RL 23.51, there's no reason to panic. Now even if it drops down itself, right, I believe silver is a very good market to let it come down and buy it from the low end, because I suspect that silver will be pushing up again, especially when the dollar weaken due to whatever reason, and then this silver will definitely be a very big run winner in this 2023 to 2024, right? Okay, so we have last one will be the Bitcoin Ethereum. So let's take a look right now. Now Bitcoin has hit the 17377 BNB RL level beautifully. Right, this RL level, this is the extension 1x1. It has tripped it and then pull back. So this is how powerful is this BNB. So of course, if we continue to go higher, it may test again 17377. But KSI is red, but the KCX is no bar. So it should be a mixed bag between both of them. So I suspect that the dollar will play a part in this. Dollar have been pretty sideways recently. Let me bring in the dollar chart. Just show it to you a quick one. Where's the dollar chart right now? Just a quick one on this. There we go. All right, you can see that dollar actually broke down last night. Okay, the dollar has broke down below the technical level. That is something that I didn't expect it to happen. So, well, maybe we have to wait for 103 to form a base here right now. But then we look at the 10-year yield as well, right? You can see the 10-year also came off a little bit. Now, of course, the data is nothing fantastic yesterday, so not too sure what's happening. But with the bond price coming down, then the yield is coming down. The bond price are buying again. So not too sure. Is there going to be some movement of funds around? Not too sure what's happening. But then again, we cannot deny that we're going to have more issues coming out economically. Yeah. All right. So that is the Bitcoin. And last but not least will be the Ethereum. Oh, with my Ethereum chart. Oh, did I lose it? I didn't have. It's not with me right now. Never mind. It's okay. I will just end it here for today. Just take note, guys. Make sure that you do your risk assessment. This is Kel signing off. Bye bye.